All right. So in case you are sitting here thinking, I feel like we've done trainings on insurance before. You're right. In case you're thinking, feel like we did in trainings on this probably like a year ago. You're right again. We do lots of these. So it's just the fun that keeps growing. So the people laughing I see are some of the members from the insurance Kaizen team. While I'll be handling this, we do have Erica with us, Joelle's here. I saw Shailene on the call. So a number of people from our insurance processing, and just as part of the PDCA, it was felt by the group it'd be good to do a refresher for everyone. We do have some new people, and insurance is one of those things that fortunately for many of you, you don't have to deal with that often. And so it's easy to forget some of the rules and what's going on. So this is a refresher both on what insurance is as it relates to Walters and Wolff, and then we're going to be specifically going through the two primary Swisses that we have and just what the steps are both for pre-construction and operations. As we go along, if you've got any questions, if you can, send them up in the chat to everyone. Erica, Joelle, if you can keep an eye on that. And then also at any point you guys want to jump in with anything or add anything, please feel free to do. But if you watch the chat, and away we'll go. So, I mean, just starting here, just with some basic housekeeping things. So again, there's two main Swisses that we're going to be looking at. If you see my screen right now, you should be seeing the portal. The two main Swisses that we have related to insurance is our insurance processing Swiss post-award and insurance processing Swiss pre-award. Both of these, because they apply to multiple departments, we always find this in the general section. So in the past, I know people have had trouble finding them. Now it's kind of nice with the new portal, because if you do just search the word insurance, they're the only two that pop up. So it is a lot easier to be able to find those. Before we jump into the Swiss themselves, let's just talk about insurance in general and the different types. So this file that we're looking right here, this is a cheat sheet of insurance that comes from Gallagher. This is our insurance broker. You can find a copy of this in the Swiss. So when we get in the Swiss, I'll show you where this is, but I wanted to start with this one first, because this is a really good roadmap and cheat sheet to not only what Walters and Wolff's maximum limits are for the different kinds of insurance, but what the different insurance is. So, I mean, kind of in a general starting out, what is insurance? I mean, most people are familiar with insurance in their own lives, right? I mean, pretty much all of us have auto insurance. If you have a car, you're carrying insurance that is meant to protect you as well as protect other people. When you have insurance on your car, in the event that you're in an accident, that insurance is meant to, both cover you in case, make sure that you're whole, as well as cover anyone else that may have been injured in that accident. And you may, if you recall from when you've redone your car insurance, there's a lot of options that you can add on, uninsured motorist and whatnot, all coming down to managing risk. That's what insurance is at the end of the day. It is a method by which we manage risk or try to take risk off of our own plates and move it to someone else. And in this case, we're moving it to an insurance company. They are, for a fee, assuming that risk. If something happens, that insurance company is going to pay out. So going through types of insurance, the first one that always comes up is commercial general liability. So what is general liability? General liability is covering you for if there are, in the most basic sense, accidents on the job site. So you're on a job site, we drop a unit. That unit falls and it damages things as it goes down. General liability is what would be covering that. It's going to cover for that property damage that occurs because of that falling unit. absolutely, God forbid, someone got injured, it's going to be covering the medical expenses of that person that's injured. So it is really, property damage and then, personal damage to people, as well as general liability may kick in for some more of the abstract damages. I mean, if the project, because of that instance, was delayed or late, pain and suffering, those are all things that general liability would carry. General liability, we usually, our limit is $4 million per project. We'll talk in a minute about excess liability that allows us to get beyond that. Most projects are asking for 1 to 2 million in general liability is what we have. Another key word that comes up a lot is deductibles. So again, going back to the example of your own life in your car, you decide every year what your deductibles are. And that deductible means that in the event that you have an accident, how much do you have to pay out of pocket before the insurance starts paying? We too have an deductible. And so for us, our deductible for general liability is $10,000. So in essence, if something happened and we chose to use our insurance to cover that mistake, Walters and Wolff has to pay the first $10,000. Okay. Let's keep going and talking about more of the different kinds. This form has a lot of information that we're not going to get into. If you look at this on the right-hand side and your eyes glaze over because you're like, what the heck are all these different things? That is okay. Did my eyes glaze over too? This is what we hire Gallagher for. At the end of the day, if you have things that come up with insurance and you're just like, I'm not comfortable like answering these questions, or I don't really know, this is where we want to bring in Gallagher to assist us. And the best person to reach out to is reach out, not if you don't want to reach out to them directly, which is understandable, you can reach out to me. Erica is also a great resource for that, as is Joelle. We can anyone from the insurance Kaizen group is just insurance in general can help with these items to be able to reach out to Gallagher, and fortunately we pay them to get into the specifics of these things. Auto liability, pretty straightforward, right? It is just like what you have when you have insurance on your car, we have insurance on our cars, but more than just covering the insurance on that car, it's covering if we have any accidents. So this is covering if we had one of Walters and Wolff's vehicles, both in an accident on the freeway, as well as an accident on the job site as well. This isn't something that we just choose to do. Our GCs require it. As part of insurance requirements on nearly every project, we have auto liability that we have to have. Keep in mind, this is not just vehicles we own. It's not like if we didn't have vehicles, it'd go away. It also, any owned, non-owned, leased, rented, hired, these are rental cars, any type of automobile that's involved around the project from us or our subcontractors. Our subcontractors have to have their own, but ours is still there too. Workers' compensation, another big one that we hear a lot. So workers' compensation, this does not protect our client. This protects our employees. So going back to that example of if a unit fell, God forbid, and let's say that someone was injured and was not able to work any longer, workers' compensation is what would be paying to basically pay for that. But it doesn't have to be things that bad. If someone in the field hurts their back while setting units, workers' compensation is what's going to kick in. If any of you as office employees, if Travis hurts his back while picking up a box in his office, technically workers' compensation if he wanted to make a claim. Travis is healthy. He's not going to have any issue. But it's for any employee where you're having those injuries on site is what's going to cover. It's going to cover. And it is a requirement from our projects. They want to make sure that all the subs they have workers' compensation, or as we're going to see a little bit, that the workers' compensation is covered by their OCIP. Excess liabilities, also called an umbrella policy. Okay, this is meant to cover anything that goes beyond our policy. So like we saw a little bit ago, general liability, $4 million. That's what our general liability is maxed out to. As you can imagine, $4 million doesn't go very far. And you can imagine a lot of circumstances of things that could happen on a site that could cause a lot more than $4 million in damage. We have another $25 million in excess liability that is available to kick in, okay, in the event that something happened. That's not to say that we want to kick in. This is something that you'll see we end up arguing or discussing a lot with people on a lot of job sites, where the contracts are written as, hey, we need you to have 2 million insurance or up to your limit, whichever is higher. And we'll push back on that to say, no, we're not going to give you up to our limit, because of the fact that that would use this up. Now, we've got a question in the chat, does excess liability cost more? It costs us to carry these policies. So it's not that it costs more that we need to charge more to the customer, but I mean, we are paying money to make sure that we have this additional defense. The reason that we don't want to, really want to limit being able to how much of this can really be used. Going back to the example, if someone said, hey, I need 2 million or up to your maximum, I don't want them to have our maximum, because if every job site had our insurance up to our maximum, that would raise our costs, or it would make it that we couldn't be insured anymore. This is all about managing risk. So if the insurance company views that, hey, Walters and Wolff is kind of risky, they got 50 projects out there that all are on the hook that could have problems that could cost us $25 million, they may decide that they don't want to insure us anymore. So we want to be, careful on projects and make sure that we're only offering insurance that's being asked for. Whatever the project is requiring, that's what we have. This excess layer, this is really to protect us. It's to make sure that we're covered as a company, and that if something else happened and there were additional lawsuits that happen to be beyond the limits, that we have something, those extra layers to be able to protect us. So we did that one. Professional liability, another one that comes up a lot. So professional liability, also known as errors and omissions. This is really covering us for design problems. So going back to that issue of the unit that dropped, okay? If the unit dropped because we had a problem, we were picking it up, that's really general liability. If the unit fell after it was installed because we didn't design it properly and there was a flaw in the design, professional liability will start to kick in at that point. This is covering us for the design of the product. That is cover, and it can cover for a lot of different things. I mean, if you had a building that we said the curtain wall was designed to 12 PSF in water penetration, and it was later determined that by design that was not true, that the system was faulty and only went to 6, and they had a building that was leaking, the professional liability could kick in to cover that of the issues that they have because our design was bad. We have up to 10 million on that per claim. Most projects only have requirements of around 1 to 2. We occasionally see for 5. It's rare that we see anyone, occasionally, but rarely we see anyone going up to 10 million on the professional liability. Pollution. This is another big one that comes up on projects. This also is covering, going back to that curtain wall that was leaking, okay? If you had leaking and it caused mold and fungi inside the building that ended up needing to be remediated and cleaned up, and then there was, an unused building, pollution liability would start to pick up all that. Now, if you're like, hey, but I thought you said the professional liability covers if we had a defect in design. There's a big gray area between a lot of these things. And this is why it's important that we have a lot of insurance, and our insurance covers a lot of different things. In the event that we had a problem, there could be multiple insurance that ends up covering that. And that's something that we would work out with our insurance and would handle that, because it's rarely so clean cut that something's like, yep, that's only general liability, or that's only professional, or it's only pollution. They all, there's a gray area that goes between all those. Riggers liability, this is a very specialized one that has to do with setting up that crane. So going back to dropping the unit, possibly the riggers liability would kick in there. Again, we've got multiple things there. The rest of this page or the rest of this document has a lot of sample copies of insurance. We're not going to go over that today because we don't need to get into that level of detail. That's not something that anyone needs to do. But it's important we understand what those basic insurance is. Before we move on, let me open the floor. Any questions on the different types of insurance? Okay.
Vince, I have one.
Yes.
The professional
Yes.
for 10 million and the pollution for 10 million, is that 20 million total? Or is that, I thought that 10 million covered professional and pollution, that same 10 million. But this is kind of laid out that it's separate.
Well, except I think your question is a good one. Looking at this bullet point that we've got right here, shared limits of liability with professional liability. So I think it is 10 million combined between the two.
Yeah, I think our professional and pollution is really one.
Fair enough.
It's really one coverage. That 10 million covers both.
I confirm it's combined.
Okay.
It's Alex.
Good. Thank you, Alex. And good question, Tom. Thanks for bringing that one up.
Yep.
And again, we don't run into the issue because it really is pretty rare that we see professional liability be more than $1 million or $2 million. I think we've seen one that was, I can't remember. I mean, Oscar, can you remember ISI? Was it, they were looking for 5 or were they looking for 10? That's been the highest I've ever seen, was what ISI was looking for. But it is extremely rare that we see high limits. All right, now let's go ahead and look at the Swiss. We'll start with the pre-award. So we'll go through the just kind of go chronologically here. We're going to go through the pre-award phase, then we'll look at the Swiss on the post-award. So step 1, estimator is preparing a hard bid or budget from which the project will likely be awarded. Key point, review the RFP for insurance information. So this is a pretty important one for the pre-construction side. We get a lot of requests for early level budgets, class 5, class 4, class 3 budgets that we know they're just getting the budget, but they're not actually awarding the job. You don't need to spend time worrying about insurance unless the GC is asking you specific questions about it, which they almost never are. You don't need to start really focusing on it, and you don't follow this Swiss unless it's a hard bid. If it's a hard bid or it's a budget that you suspect that they are going to actually award of, that's when we want to start asking these questions. So step 2, estimator confirms the project is an OCIP CCIP. Now we get a little choose your own adventure, proceed to step 3. If we're unsure, step 4. If it's not going to be an OCIP, proceed to step 7. OCIP. So what is that? OCIP stands for Owner Controlled Insurance Program. Now we say OCIP CCIP. CCIP stands for Contractor Controlled Insurance Program. These are the two most common names, but there's a lot of other things. We see UCIPs, University Controlled. Everyone's favorite, TCIPs, Tribal Controlled, when it's things on Indian reservations. I mean, there's a lot of different forms here, but they all stand for the same thing. Owner-controlled insurance programs, and I'm just going to keep using that name, is a new type of insurance. And I say new, but it's been around for decades, but it's become incredibly popular over the last 10 years. The owners have figured out, hey, when every one of my subs carries their own insurance, it ends up costing me more money. Me as the owner of the building. I mean, and that's because, okay, Walters and Wolf has their insurance, and Herrick has their insurance, and DevCon as the contractor has theirs, and everyone's paying for their own insurance, right? And ultimately that money goes to, is charged to the owner, because if it's a cost to us, it's based into our bid, and that's going along to the owner. So along the way, someone figured out, hey, here's a new product that we can sell to people, and it's the owner-controlled insurance program. Under an owner-controlled insurance program, the owner is taking out the insurance for everyone. Now, I'll talk in a second about what insurance is covered, because it's not all the types that we just had. But the premise is that, hey, if the owner covers the insurance for everyone that's going to be working on site, so they're covering Walters and Wolf and Herrick and DevCon and all these people, buying in bulk, buying that insurance in bulk will cost less money than if everyone went and bought that insurance independently on their own. And so what they're looking for, and why this matters to us, is that when you are part of an OCIP, they're looking for a credit from us. Because again, when we carry our own insurance, we are charging the customer. It's not a line item, right? You've never seen a line item in our bids for it. As PMs, you've never seen a line item for insurance on a green sheet, but it's built into our number. It's part of our field labor rates. It has all the insurance built into that. So we're ultimately charging them. The owner's looking for this credit back for the fact that, hey, if they're going to carry the insurance, then none of us as the subs and the GC should be charging them for that. So the OCIP, owner controlled, CCIP, contractor controlled. If DevCon wanted to carry their own insurance and have that be for all the subs, that's what a contractor controlled is. There's
question, Vince.
Yes.
Is it normal for all trades to carry their insurance in their labor rates, or is that unique to us?
I can't speak to what everyone else would do, but my guess is that they would be carrying it the same. And the reason I go with that is workers' comp, and Alex, feel free to jump in if I'm saying anything wrong here, but ultimately what we pay for workers' comp is based upon the labor that we employ. So our cost as a company is based upon the labor hours that we use and what that labor is actually doing. And so
that's tied to performance, right? So like at the beginning, we give them like an estimated, credit lump sum based on our estimated hours. But then if we come in way under or way over, do we ever get money back, or do we ever end up paying more if we run into a challenging project in the field?
We never get money back, meaning the way that it works, that if you ended up, and we're gonna go through the calculator in a few minutes on how we actually calculate that credit, but you are correct. We estimate how many hours are going to be used on that job. That helps determine what that credit is going to be for the fact that we're not having the insurance. That's based upon how many hours we believe the job is going to take. Let's say we thought the job was going to take 5,000 hours in the field. If it ends up taking only 4,000, so it wasn't as many hours, so we gave back too much money, right? Our credit was too big because it was based on 5,000. We only spent 4,000. No one gives us, there's nothing back. The fact we gave too much money. If we spent more hours, if they audit, I say if because it's not a guarantee that they will, but sometimes it happens. If they audit the hours and check, they may ask for more money back. They will ask for additional credit back. Yes, Alex.
I just want to say that we report those hours spent on those jobs to the owners. So they have the exact number of hours because they have to report that to their own insurance. And we deduct those hours from the hours we declare to our insurance. So we will not pay workers' comp on those hours, but they will.
So there's two types of insurance that the OCIPs will cover potentially. That's the workers' comp and the general liability. So whenever we're talking about an OCIP or a CCIP or a TCIP or any of those, it at most is workers' comp and general liability. So it's not covering the professional or the pollution, any of those. Only the GL, and it's not all the time. Sometimes they only want to cover one or other, one or the other of those, of GL or workers' comp. And that insurance is only covering on-site work. An OCIP does not cover our shop. So it has nothing to do with our shop hours or what we have going on the shop. It's only covering for the work that's being completed on site. So if you ever see requests for an OCIP, you'll see, hey, this is an OCIP, and they still say, but send us copies of all your GL insurance, because they still are requiring us to carry general liability insurance. We're not being asked to carry general liability for the job site, but we still have to prove that as a company, we're insured, that our shop has general liability insurance. As a company, we have it, because there are still things that could happen off the job sites that our general liability would have to cover. So continuing with this Swiss, so this first step we have is about, as the estimator, confirming if this is an OCIP or not. So following along with this choose your own adventure that we've got going here, let's say that it is an OCIP. You know for a fact it's an OCIP because the documents, the bidding documents, tell you the job is going to be an OCIP. In that case, we go to step 3. Step 3, estimator issues an RFI requesting the manual or policy. I won't open up this Word document. It's a 1-sentence, 2-sentence here that just tells you what to ask. And you're in effect asking them, please provide us the manual and the policy. The reason we want that is that before we enter into any OCIP on a project, or even like bid a job that has an OCIP, ideally, we want to review that manual or policy. So think about it. An OCIP means that our own insurance isn't going to protect us anymore. We're relying on the owner's insurance to protect us. There's inherently a risk with that. We've made sure as Walters and Wolf, we have great insurance that protects us as a company. We don't know what the owner has bought for insurance. But rather than just trust that their insurance is going to be adequate and protect us, we want to get a copy of that actual manual and that policy so that we can review it and make sure that it's good. 9 times out of 10, probably 95 times out of 100, it is. It's not a problem, but we still want to review it. Things that we want to look for are those gaps, places where that insurance could leave us with a hole. Examples would be, did that insurance that they took out, is that policy actually for 10 other jobs rather than one job specific? And we could be left not insured if they have claims on those other jobs. Worse yet, is that insurance on those other jobs actually for condos? And we know they're going to get sued on the future on it. Those are some of the things that we're reviewing. And when I say we, ultimately, you're getting this information to Erica. Erica's getting this information over to our broker who does these reviews for us. But that's what we're looking for when we're reviewing these manuals and policies. Now, so step 3 was you knew it was an OCIP. If you're unsure if it's an OCIP, then we want to ask the question. We want to ask the question to the customer of, hey, is this an OCIP or is this not? Oftentimes you're going to get an answer of they don't know. Insurance is an afterthought. It's early in a job. Everyone's working on SD drawings. They know they got to get released because they're trying to beat everyone else to the field, and they want to be in the field in May of 2023. And you're like, hey, what's the insurance? And they're like, I don't know. We're still trying to figure out like what this cladding's going to be, because they're not worried about it at that point. That's understandable, but we still want to ask the question. And if they're coming back with an answer of, hey, I'm not sure, this is when we want to send a qualification to them. And this qualification, it's in our contracts, in our proposals, I should say. We ultimately try to get it into our contract if we need be, but opening this up just so that we can all see it. This is the language. If they tell us they're unsure, this is the language we want to get in front of the customer, that the policy and the manual must be acceptable to Walters and Wolf. If we deem that the wrap is to be insufficient, we reserve the right to withdraw from the project, or we can provide our own insurance at mutually acceptable coverage amounts. We're just trying to let them know, like, hey, cool, you don't know if you're going to have an OCIP or not, or you don't know if you have manuals and policies or not. Understandable. We're just reserving our right not to participate in this or to withdraw from the project if we think that this is going to be a problem. So it usually doesn't cause a big stir at this point, because again, everyone's really focused on whether these are going to be plate panels or composite panels. They're not super worried about insurance, but we just want to make our point known now early so that when it does come up, we're covered. Now, if it is an OCIP and they've asked you for the credit, in step 6, estimator calculates the credit so that we can provide that to them. Now I've got our calculator open. That's what this file is over here. I've already got it open. This is our calculator. We update it once a year. We update them in August. So this is our current calculator for 21 into 22. Notice at the bottom, there's 3 tabs. You've got a Northern California, Southern California, and Las Vegas. It's important that you select the right tab. Our insurance varies by branch, largely due to the different labor rates that we have. It is tied to those rates. It's a small difference, but you want to make sure you're using the right one. Calculator is very simple. We're only going to take a minute or 2 to look at it. You only need to fill out the yellow fields. Calculator is broken down into 2 sections. You've got this top section. You use this if you're only having general liability. So again, their OCIP can cover general liability, workers' comp, or both. If in the case that they only had general liability, you just use this top part, and in this yellow spot here, you input the total hours. Let's say that you had a job that had 5,000 field hours on it. You put the 5,000 and you get the credit. To me, this is the most frustrating thing about OCIPs. They take up a huge amount of our time. We go back and forth all the time on these things. And at the end of the day, it's over a ridiculously small amount of money. 5,000 field hours is a decent amount of field hours. Like that is what you would see on a project that is probably a $5 to $10 million project, depending on what the scope is. And the credit that we're doing and all this effort that we're going through is to give them a credit of $5,000. It's like peanuts compared to what the value of the project is. But it's unfortunately the world we live in, and the owner is saving some money doing this. Now, why is this number so low? As Brian brought up, like this is tied to, our performance. And by our performance, it's tied not only to how many hours we use on jobs, but how safe we are. No different than your car insurance. If you get in an accident, what happens to your rates the next time around? They go up. Our insurance works the same way. If we had a lot of claims against our insurance, we would spend more. If we had a lot of accidents going on in the field that caused a lot of issues and had workers' comp claims, our rates would go up. Walters and Wolf is a safe company, and because of that, we have relatively low rates. So the credits that we're offering back are relatively small. And you will sometimes get this from a customer that comes back and goes, "You're screwing up. Like, that's not right. That credit should be a lot more than that for this size project." You can bring us into it and we can help explain that to them and show the breakdown. But the reality is, it's like our factors are less. Like, we don't have, if we had a lot of accidents, this would be higher. Like, we don't spend a lot on insurance, so we don't have a lot of money to give back. Now, GL is legitimately a lot less than the combined one. So if you have to do both general liability and workers' comp, we use this calculator down here at the bottom. Now, like I said, workers' comp It's based not only on how many hours you do, but what the task is that the person does. If you've ever looked at all of the cost codes that we have for field labor and shop labor, and you thought to yourself, like, why do we have so many cost codes? Like, let's just call it the field. A lot of that comes from the breakdown that's required when it comes to workers' compensation. There are different categories for workers based on what they're doing, and it's all down to how risky is this job. Going back to my example earlier of, workers' comp is going to cover Travis. If he hurts himself in his office, we pay a lot less for Travis working in the office than we would for someone out on a job site welding steel clips on the side of the building, right? That's factored into that. And so because of that, we have to actually break it down based upon what we're doing. So these codes right here match up with the codes from your green sheet. Again, we're focusing on the estimator would be filling this out because you're giving the credit up front, but PMs, when we actually get the job, when we see in the post award, there's an opportunity that you have to fill this out too. So it's important how to do this. These are the codes from the green sheet that apply to the different field codes. So we just want to take our total hours for each one of those and plug all these in. So just going with our same example of 5,000 hours, let's say that we had, just gonna break that up, 4,000 of those were in metal work. And I'm just gonna go ahead and stick 1,000 of those over here in the supervision, okay? It's gonna calculate those credits as applicable, and I get my total here. So if a workers' comp, my credit is 11,530, my general liability is 5,178, total credit 16,000. Again, it's peanuts compared to the size of this job if I've got 5,000 labor hours on it. But that's the work that we have to go through. Before I move on, any questions on this calculator?
Yes, do you want to explain the holdback?
Which,
The
oh
dollar.
yes, okay. Back to Brian's point of, do we get money back or if we're over? This calculator only, it does about 90% of what the credit should be. So it does the calculation based upon our example of 5,000 hours, but in its formulas, it holds back 10%. And the whole basis of that is the fact that we know that we're never going to get that money back if we perform better than we thought we would. So built into this is a bit of a holdback on this. So to Alex's point, as the job goes along and we submit hours, if we end up performing better than we thought, we're okay. It's going to end up working out. If we end up going over and they audit us and they want more, okay. I mean, it's legitimately, but we're holding some money back. You just need to know, put your hours in, use these totals. That's the credit that we want to offer.
And then,
And don't mention there's a holdback.
And don't mention there's a holdback. Yes.
and then just in general, this should apply to change order quote labor rates on these jobs, but only if they ask for it or are smart enough to realize that this is baked into our number, correct?
I would say that that is true, Brian. I mean,
Yeah.
Technically on a change order, we should be, giving them a credit. Occasionally you get a customer that asks for it. It's more effort on everyone's part to go and do it. Again, if they're going to audit the job in the end anyway, they're auditing it on total hours spent. And so that credit's going to be based upon whatever the final, the final hours were anyway, if it went over.
I guess that's what I'm getting at is like, should we leave it in the change order quote? I mean, it happened one time for me on O Street where the RNS was like, hey, your labor rate's too high because you had all this insurance in the backup we provided.
Yeah.
We're not paying it.
Yeah.
But then I don't know that the hours we spent on change orders weren't also, deducted at the end when they did the audit or whatever.
Yeah, Brian, I would, use your regular change order rates unless a GC does come back and go, hey, this is a, it's an OCIP or a CCIP or whatever, you know, you need to pull, like Vince just pulled up, you know, you need to pull your workers' comp and general liability out of your hourly rate or whatever.
Mhm.
You know, and you can do that, but a lot of times they don't care either. And just at the end of the job, they do an audit and go, hey, you told us you were going to use 5,000 hours. And maybe with change orders, we use, you know, 5,500 hours. And they go, we need a, you know, a credit for the other 500 hours.
But a great question on it, and let's just talk about this because this can happen. So here I brought up our change order breakdown, our standard change order breakdown for Northern California for 2023. As you can see, directly built into our change order rate, you have that workers' compensation and general liability insurance. And that's built into and how we're getting to this total. So you may run into, on the operations side, a GC that when you submit this form as part of your change order number 1, or if you're submitting it before, they come back and go, hey, you got it. No, there's an OCIP. You can't charge me for that stuff. In that case, I mean, if we need, you can come to me and help with this. We'll make a custom form for them where we back these out and your rate will be less. So the thing is, Brian, it may end up being easier because what we'll end up doing is the labor rate that you use in the portal for your change orders, we'll just make sure that the field labor rate you're using doesn't have these in there. And therefore the credit is just like baked into everyone, as long as they're not asked for it to being broken out. Does that make sense? Like the physical rate that you've got used.
Yeah, no, I mean, that's what we did is we went back and forth with this, crossed out the liability insurance and the workers' comp, and then just figured out what our new rate was and made that the default labor rate for the change order quote.
Yep.
Have we ever gotten caught with our pants down since this equals $8.91 per hour and the credit calculator you just did was like $3 and change per hour?
It's never come up to me that anyone has ever said that or questioned or done any of that. I don't think anyone has done that math that you just did right now.
Okay.
I mean,
it's never come up. It's a good point, but to date, I haven't run across it.
Okay.
All right. Any other questions on the calculator? Okay, continuing with the Swiss. So a lot of what we were talking about was it was an OCIP, or we thought it was going to be an OCIP. Back from our choose your own adventure step. If it's not an OCIP, then we move to step 7. So again, pre-construction, you're bidding a job. It's not an OCIP. If the insurance information is available, meaning what is actually required, and this is usually part of the bid documents for a hard bid, where they spell out what GL is required, what professional and liabilities insurance, they spell that out. If that's available, you want to send that information to your contract administrator. I mean, at this point, Erica's handling almost all that. So Erica would be the one that we want to send that to. And Erica will filter that and get that, if needed, over to our insurance group so that they can review it. If any of you have gone through a contract review, frankly, in the last 5 years, you know that there is always information in the insurance documents that we as a company do not agree to every single time. I can't think of a time that it has just gone like cleanly through. The sooner that we can review these things and get our comments back to the customer, ideally while still in that bidding phase for a hard bid, the more likely it's going to work out. This is always one of those cases when you bring things up after the fact, you've lost your advantage in that discussion, right? We want to keep our leverage and try to get this. So again, hard bid project, not an OCIP. You see that insurance information. We want to make sure that we're pulling that information out, getting that to Erica so we can get that in front of our broker. They can review it and provide their comments for us. It'll just help everything go a lot smoother. We can get that reviewed up front. Final steps here. I mean, these kind of came from the ones above. If we have those manuals and policies, let's make sure we're getting them to Erica so that we can get the manual and policy from the OCIP. Step 9B is about, reviewing that insurance to make sure if we meet the requirements. That PDF we were looking at earlier, that's this PDF right here. And we have certain times that we specifically always want to get it over to insurance. We're not going to go through it today, but if you ever have time and you want to watch a whole PowerPoint from Ken Neese on insurance, it's here for you, and you can see it. That's the pre-award Swiss. Let's now look at the post-award. So this is now, we have the job. What do we want to go through and do? So we'll look at this one quickly here. So the job's been awarded. This is post-award. And it doesn't matter whether it's been awarded for D&E or full scope. We want to follow this regardless. At the kickoff meeting, estimator is going to confirm the project insurance type. If it's not an OCIP, we'll proceed to step 11. Let's just keep going as if it is an OCIP, right? So now it's the kickoff meeting. We're all together, and it's about, okay, so is this job an OCIP or not? A lot of times we still don't know, because again, they just kicked us off, but man, we're still trying to figure out that whole like plate panel, composite panel thing, and no one's really thinking about it. So you'll notice that a lot of these steps we have right now are similar to as the pre-award, right? But now it's like we have the job, our questions hopefully are carrying a little more weight as we're asking the customer. So if the project is an OCIP, like we know it's going to be an OCIP, but they still have not gotten us a manual or policy, now the PM is going to resubmit the RFI to the customer, okay, asking for that manual and policy. So again, let's just think about how this really goes. We were bidding the job. The estimator asked them the question, hey, you tell me it's an OCIP, you don't have a manual and policy, can you get me a manual and policy? RFIs don't, there's pre-bid RFIs, but this doesn't, those are all just emails back and forth. They've said, no, I don't have that. Keep focused on this panel issue that we have, right? Didn't go anywhere. Now we have the job. So now we want to officially submit an RFI, a real RFI from the portal, so this can actually get logged, where we are formally requesting, as the subcontractor on the job, we need this manual and policy. So the language for it is in here for you to copy over, but we want to, as the PM, get that in front of them, that we are formally telling them we need to get this information. If they respond still with like, hey, it's a not sure, we don't know, or it is, but we just don't have these manual and policies. It's gonna be another 3 months before anyone starts worrying about insurance. That's okay. We want to remind them again about that qualification. We looked at this qualification a while ago, just letting them know, hey, that's cool, but just know until we see it, we're not going to promise that we're going to enroll. If it gets so far that they've sent us a contract, we will make sure that this qualification becomes part of the contract. It is, you're looking at the why here. RAP insurance qualification is critical and must become part of the contract if the RAP manual and policy have not been received or approved. If we sign a contract, but we haven't looked at that policy or manual, when those eventually come out, if we have a problem, we have lost all leverage because we signed a contract. This happens. We've made this mistake recently where we've signed contracts and then we find a problem with the insurance after the fact, and we've just lost all of that leverage to be able to deal with it. So we want to make sure we get these things, get them in front of it, get it part of the contract so that we're covered when and if that manual and policy comes out. Step 5, if we need to recalculate the credit and the PM needs to calculate the credit, we've got the calculator here again. I won't open it. It's the exact same calculator we looked at 5 minutes ago. If we do issue that credit, we want to send a copy of that calculator to Erica so that she's got that and we can track that, so that when it gets over to payroll, Shailene can know how we came up with that credit. This was the basis of it. We're able to track everything through. It's a real job now. So we just want to be able to share information with the team. At this point, anything that's coming up insurance related, just making sure that Erica's aware of it. Erica makes sure that everyone else on the team knows about it as needed. When that manual and policy does eventually become available, get it over to your contract administrator. They're going to make sure that it gets to our broker as well as gets to Alex and gets over to Glass Receivable, that everyone has it. They're reviewing it and confirming that we can sign up. In that rare case, step 7, that after reviewing all the manuals and policies, we find that it's unacceptable, that, you know what, we can't sign up for this. It does not have the adequate coverage that we need. Alex will set up a meeting with operations and pre-construction and everyone else, so we can discuss those issues, discuss what the problem is, and determine like how we're going to move forward and resolve that with the customer if we have it. Step 8, though, this is what happens 99 out of 100. If it is good and it's approved, that approval is going to come out. Payroll is going to be notified that they can enroll, that the policy acceptable, and they're able to enroll. And then Erica will include the manual and policy and other items in her checklist that she's keeping between her and payroll, where we're tracking all these jobs that are going through OCIP. Payroll is going to enroll everything. We still have insurance policies that we need to do. Those are going to get forwarded to Glass AR. Glass AR will record in the OCIP CCIP tracker. It's just getting all the insurance in place. We got a question from Paul. When did the PM start getting involved in insurance credit calculations? First time hearing this. It's really going back to that, Paul. PM calculates credit if required. Most of the time, you're not going to need to do it if it was already done. But if the answer we've been getting all along in pre-construction was, we don't know if it's an OCIP, we don't know if it's an OCIP, we don't know if it's an OCIP, and then the job gets released, at that point is when, if they're like, yeah, now it's an OCIP, and they want a credit, that you would produce that credit. Now, you're probably going to work with pre-construction on that, because there's going to be things that you're going to need possibly help with. It'll depend upon what's going on in that project. I mean, do you have the full green sheets with the hours or not? But that's the point that you would do it. Again, it's if it's required, if it hasn't already been done. If it was already calculated by pre-construction and it doesn't need to change, then we're just using that calculation that pre-construction did. Does that make sense, Paul?
Yeah, it does. Thanks.
All right, finishing up here on just some of these final steps here pretty quickly. If you have a subcontractor on the job, we need to make sure that they know it's an OCIP and that we're providing that manual and policy to them. So nearly all of our projects, we have at least one subcontractor on it. Valley Waterproofing, is most common. We want to make sure that we're getting this over to them and that we are getting that credit as well. We have done this in the past where, and this isn't good, where we've not gotten that credit from Valley. Valley's sent us their invoices for the full amount, including the cost of their insurance. We've paid all those invoices. And then at the end of the job, when the GC and the owner audit the hours and they go, oh, here's what you actually, here's what you owe us. We're pulling this out of your final billing. And we're like, oh, crap. Like, some of this should have come from Valley, and Valley's already paid us. Like, and we don't want to be in the situation where we're going back to our customer and doing it. So just make sure that we're keeping them apprised that when we have a sub, they know it's an OCIP, that they have signed up for it. That's the other spot where we've gotten in trouble, especially on more fast-paced work. Suddenly, we've got people working out on the job site from our sub, and they haven't even enrolled yet. That's a major problem. Right? We want to make sure that people are signed up and enrolled and complete with the OCIP before they actually start on the job site.
Vince, what'll happen with that is most of the time your sub shows up, the contractor goes, they're not signed up, go home.
Right.
And it takes sometimes weeks to get through all the approvals and paperwork. And in the meantime, the GC's going, well, this is on you. So when your sub comes back, they need to work overtime to get caught up, and you guys need to pay for it. So it is important to get those subs signed up early.
The final steps in the post-award Swiss are all from our adventure up above, where they shifted us down. There was no OCIP. Super rare nowadays, especially on bigger work, that there's no OCIP. But Random case that we had none, we get those insurance requirements over to Glass AR. Glass AR puts together all the certificates of insurance, gets those certificates of insurance sent out to the customer. So we're down to our final couple minutes here, and we wanted to for sure end on time, but that's insurance in a nutshell, and our process for how to process it. Any other final questions? Okay, well, that's it, guys. I'll see you again in a year. We'll do this again probably in a year because it's that much fun, just like to keep doing it. But in the meantime, if you have any questions or anything comes up or anything insurance specific, remember, you've always got Erica to reach out to, and me. You can reach out to me too. I'm dealing with it enough. It's super fun. I can help you with a lot of stuff.
Vince, you've recorded that meeting. Where the recording is gonna stand if people want to rewatch or share that recording with
So
somebody.
this will get loaded to our YouTube. For anyone in pre-construction, the link to that will go into our training page. I'll send the link, Alex, to you as well as to the PMs. If you guys have any spot that you want to put it, if you've got a training spot where you keep stuff, just to have it shortcutted, but it'll get loaded to the Walters and Wolf YouTube page shortly.
Thank you.
All right.
Good job, man.
Thanks, everyone. Have a great afternoon.
Thanks, Vince.
Vince.
Thanks,
Thanks,
man.
Vince.
Thanks, bye,
Thanks,
everybody.
Vince.
Bye.